There are a number of financial management mistakes that I have seen business executives and business leaders make over and over again. People are still making the same mistakes over and over again, and some of these mistakes have very serious consequences, both for the business executives as individuals and for the businesses that they manage. So what is financial management really? Financial management is how money works within a business. In very simple terms, the management of a fund or the finances of a business is what is described as financial management. Now, for whatever reason, some business executives, especially business executives that are not the owners of the businesses that they manage, and business executives that are not finance professionals, sort of assume that they don't need to understand financial management. They assume that they don't need to worry about financial management. They assume that they do not have anything to offer in coming up with the financial strategy of a business. That's a very big mistake, because when you leave financial management to the CFO or the finance manager alone, so many things can go wrong. One is you are not querying what is coming out in terms of outputs of the finance person's work. You are not contributing to the financial strategy. In fact, you're not taking responsibility for financial management of the business that you are managing, whether you're a finance professional or not. Financial management, the entirety of how money works within the business that you manage, is your responsibility, not just the responsibility of the CFO. Not having a financial strategy for the business. Now, what do I mean by a finance or a financial strategy? It's all about how we source funds for the business, the finance or the funding strategy of the business. Not having a funding strategy is a very big mistake. We've seen organizations where, because there is no funding strategy in place, documented, articulated funding strategy for the business, you find business executives sourcing funds that are not quite appropriate for the kind of business that they manage. And many times, of course, this leads to a lot of problems within those businesses. So imagine sourcing short-term funds to fund long-term projects. That is a sure recipe for disaster, because by the time you need to pay back the short-term funds you sourced, your long-term project is not even complete or may not even have started, and then you find the company running into big challenges with high costs of running the business and not being able to turn a profit because expenses are too high. So that's just one simple example of what the result of not having a finance strategy can be within an organization. There are so many things that can go wrong. Every organization should have a funding strategy, a finance strategy. These are the, stating clearly, these are the kind of funds that we can source. These are the sources of funds that we would seek, and these are the kind of projects we would use the funds for. Just clearly articulating the policy or the strategy of a business in terms of fundraising. And that shouldn't happen just when the funds are required. It should be a standing document, such that you can update and refer to as required, as a guide, to ensuring that the business is properly funded. Reports. Notice that I said financial reports, not just financial statements. So in my experience, I've met a lot of business executives, non-finance executives, that simply do not have any idea of what financial reports, what they mean. They are unable to understand financial statements. They are unable to ask the right questions even when the financial statements are placed in front of them. And somehow, for some, they don't even think that this is an issue. Trust me, it is a problem if you don't understand financial statements. Now, on a lighter note, one of the biggest problems that can cause is that you will give your finance people a whole lot of headache because you will ask inappropriate questions, and you will, apart from that, of course, you will give yourself away as not understanding the financial statements, such that anything goes. Even when your finance people are making mistakes, you're unable to query what they're doing. You're unable to ask appropriate questions. And you are literally at the mercy of the competence of your finance person and of the integrity of your finance person and of their ability to pay attention to details. So if your finance people do not have integrity, if they are not competent, if they are not paying attention to details, and they may even have all of those three, but they are overwhelmed and there are errors, you are at their mercy because you are not even asking the right questions. You don't even understand what they're doing. So whether you're an HR professional, you're an operations professional, you're a technology professional, you're a chief executive officer, you're a strategy person, every business executive should understand financial reports. Paying attention to cash flow management. Okay, so now I'm bringing it home. So yes, you don't understand the statement of financial position, otherwise known as the balance sheet, or you don't understand the profit or loss statement of profit or loss, and then you also do not understand cash flow management. That makes it even worse. Now, cash is like the heart or the lifeblood of a business. A business can continue to exist if it runs into losses, as long as it does not run out of cash. Now, by the time you get to a point where a business actually runs out of cash, that business, the chance of survival is very slim, which is why you find organizations saying cash is king. Cash is king. Once a business runs out of cash, it is almost as good as dead. As long as a business still has cash, there is hope for its survival. Now, imagine a business executive that does not pay attention to cash flow. That means there is a chance that business can run out of cash because you're not even paying attention. There is a chance that you can spend more than there can be. The outflow of cash can be way higher than the inflow of cash. Now, no matter how much profit you seem to be making on paper, if you run out of cash, you can't even continue to be in existence. You can't fund operations. And a fifth one is not automating your finance and accounting workflows. Okay, not automating your finance and accounting workflows. What do I mean by that? So ordinarily, your financial records should be recorded, or your financial transactions, should be recorded as they occur, and should be recorded in such a way that there is only one source of the truth. What do I mean by that? It is recorded using technology. It is recorded using software. The processing of transactions goes through a software such that at any point in time, if I need records of all the monies we've received, there is only one source of that information and it is accurate. Now, when workflows are not automated, what then happens is that the finance team process your financial transactions and the preparation of your financial reports manually. And it is interesting to note that even today, many businesses still depend on manual processing of financial reports, even large organizations. So yes, they do have a software, but for whatever reason, the final output, the final financial reports, the software is not set up to generate the final output such that the finance people process some transactions using the software, and then maybe take it into a tool, another tool, maybe do the final processing of financial reports before sharing them with business executives. What that means in essence is that report is subject to errors. You may not have one source of the truth, because human beings, we can forget what we did last, we can forget where the final version is. If document management is not properly handled, you can end up having several different versions of the same financial report, such that there is no one source of the truth, and it is then difficult to rely on such financial reports to make business decisions. So not automating your finance and accounting workflows is a big mistake. Shouldn't happen, because it leaves you exposed to risk. The risk of misappropriation, the risk of errors, irregularities, even the risk of fraud. Okay, so imagine, combine all of these things together. You run out of cash, you don't have a funding strategy, you don't understand financial reports, you leave everything to you're at the mercy of your finance and accounts people, you leave everything to them. Combine all of those together and things can really get very messy. These are 5 of some of the mistakes I've seen business executives make. And so the question is, what are you going to do to correct